All right, let's start. We have waited for 5 minutes. I think that's good enough. So, as I told you, this time today we'll have the session with regards to candlestick pattern. Uh, this was introduced by Japanese people, very famous. We all follow that. So, candlestick pattern or a candlestick denotes market sentiment or momentum, or it talks about um, is the bears are taking over the market or the bulls taking over the market. So single candle may not denote much, but it will add value to the preceding or the succeeding candle. So a candlestick is a way of displaying information about an asset price movement. So candlestick charts are one of the most popular components of technical analysis. So, and you might have seen a lot of whenever you see a 5 minutes graph or a 15 minutes graph or a 30 minutes, 45, 1 hour, 2 hour time frame or a daily, you will see different candlestick form, right? A candle will have a wick. Wick is like a small, if you see, look at my cursor, this is a small wick. This is called the wick. So the wick also gives little more information about the market, the strength of the market, if it's bearish, bullish, a lot of information gives. Even just looking at the candlestick on a daily basis, we can come to a 60% or 70% conclusion that okay, what could be the trend of the market tomorrow? It could be a a uptrend or a downtrend, sideways. Depending on that, 60% to 70%, we can take a call just looking at the candlestick pattern. There are a lot of candlesticks. I will not teach you all the candlesticks. I'll teach you only the important ones, because if you start knowing too many candlesticks, then our mind starts wavering. Hey, then you become more indecisive. So we will only focus on candlesticks which are very common. Most of the people use it, they understand it, and they act upon it. Right. So we will start with one by one. We'll start with the bullish candlestick pattern, then the bearish, and the continuation pattern means, okay, there's a bullish pattern. We see, okay, after this candle forms, we can see the market is going up. For a bearish case, okay, after this candle, we can see that the market is going down, bearish. Then certain instances, we also look at a candle saying that, okay, this is a bull trend, or we saw this candle, okay, the bull trend will continue. If it's a bearish trend, been looking at that candle, okay, the bearish trend will continue. It's not that it's going to reverse. So we'll go through all this stuff. Right now, what we will do, we'll go by one. All right. So see, the bullish candlestick in the US, it is like a white, and a bearish is a black. But in Indian, we follow the UK one, which is a bullish is a green, and bearish is denoted by the reddish color. You can see there is a wick on the top and there's a wick at the bottom. Whenever you see a bullish candlestick like this, so what does it indicate? It indicates the price when it opened at the bottom. You look at my cursor, okay? Opening price started here. Slowly it went up till the wick, upper wick shadow. This is what called. Then it came down and closed here, closing price. When it came here, opening price, initially it could have went down. That's the reason we could see a lower wick also. It came down here, made a wick, went till the up and closed here, which is called the closing price. Opening price is this. So the body for a bullish candlestick, you have an opening price, a closing price. The upper wick shadow means what was the maximum, the price it touched on that particular day. Here at the bottom, what is the least price which touched at that particular day, the minimum price. That is how the bullish candle is taken into consideration. This is how we denote it. So upper wick, there's a closing price because it's going up, right? So closing price, body, opening price, and the lower wick. Lower wick means it went up till here, but again market pulled up at the top, then closed here. In the same way, you also have a bearish candlestick. Bearish candlestick is totally opposite to a bullish candlestick. Where it starts, actually, it started, market might have started somewhere here on the top, but market pulled it down to here. So lower wick shadow is still here. Okay. Then opening price is here, right? Because wick was there, candle closed here, opening price is just opposite. See, for a bullish, the closing price is on the top, but for a bearish, the opening price is on the top. Then you have the body, the closing price is at the bottom, but for a bullish candle, it is at the opening, just opposite. Then the lower wick. So that's a basic difference, the bullish and the bearish candle. This is how you need to understand. If it's a bearish market, you see a red candle, you should always understand that the opening price is on the top and the closing price is in the bottom. For a bullish, closing price is on the top, opening price at the bottom. This basic understanding you should always have in your mind, because later on candles which we talk about, most of the things we will go through this phenomena. Okay, so is it clear? Is it simple? If you have any questions, you can ask me, because you need to understand this about the candle before we move forward. If anybody has a question, please ask. All right. All right. So first candle, which is called the hammer. So we are now touch basing only the bullish candlestick pattern, and if any bearish comes, I'll let you know. So hammer, which is very important candlestick pattern in a daily, hourly, 30 minutes, 15 and 5 minutes. Most of the people they use and they follow this hammer, because hammer denotes just like a hammer. I'll show you the way it has got a upper body, a thin upper body, but it has got a longer wick, which denotes a bullish trend. But we need to understand where that hammer forms. Based on that, we have to decide whether this is a bullish or a bearish. All right, so let's go to the next one. All right. Market is falling down. From up, it's coming down. We don't know where the support is, right? We may be knowing support, we might have drawn it, but we cannot conclude that okay, market is going to stop here, because when market falls, it falls like a lift. Very quickly it falls. So we don't know. What is one indication which can give us is the hammer. See, this is a hammer. It has got a head and long wick. It should be minimum 2 to 3 times of the size of this candle. If the candle's head is X, then it should be minimum 2x into or 3x. The market is falling down, slowly falling down in the downward trend. Whenever we see this candle, this is called a hammer candle. Hammer candle, whenever we see, it denotes that market is going to reverse. Don't go by the illustration what I've given you right now here. Okay, don't go by that. Sometimes what happens, because it won't be very easy like this. Sometimes after this hammer, it could be another red candle, or could be a slow one more red candle. Then only it may go up. But you need to understand that after a big fall, if you see a hammer candle like this, the reverse is imminent. Definitely it is going to happen. So what we need to do, above the hammer, next candle here, you can take a long position, or if you want to be 110% sure, you take on the top of this candle, the green candle here. You have to go for a long position. Again, I'll explain you, which is most of the professional traders how they do it. When you look at a daily chart and you see that the market is falling 5, 6, 7 days, and you see a hammer, the upward trend will be very good. It will go till the place where the market started falling, till here. And if you're looking at a 1 hour chart, then it decreases further. I'm talking about going upward. You have to also know the target, right? In the same way, 30 minutes and 50 minutes. The timeline, the more the what do you call the target you can design, take it. So this is basically a hammer for a bullish trend. Whenever the market is falling, you look at this symbol is called the hammer, just like a normal hammer which a carpenter uses. It looks like that. It could be green, it could be red. Don't go by the color. Forget about the color. Okay. This same candle could be a red candle also, like this on the top. That is immaterial. color is immaterial, but if you look at this candle at the downward trend, just follow, go upward. Okay, next one. One is that hammer. Next is a inverse hammer. Same hammer shape. You'll have it like this. See here in circle, inverse hammer. Okay, but here what happens? The wick is long, the hammer is inverted, totally upside down. Okay, same thing. So market is falling, 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 falling. You will see an inverted hammer like this. This is also sure short sign. Means what happens is why the inverted hammer is also taken into consideration as a bullish, because the sellers try to push the market down, 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 but again buyers pushed it up, sellers pushed this down to form this small head. That means buyers have entered into the market. They're trying to push the market up. So whenever you see this inverted hammer, this is also suggests that buyers have entered into the market. They're slowly, not immediately, slowly taking control. And that's when you need to start taking a position. So what you can do, some people will add going long above the next green candle. Some people are very confident just as soon as the inverted hammer candle is completed, some quantity they will buy beginning of this candle, then half of the quantity or more than half they'll buy at the above the next candle, and they know that the market will go up. So one is the hammer. I've shown you this one, but the market is falling. Second is inverted hammer. This one. Both are bullish in nature. Third, any questions? Please ask.
For inverse hammer also, Matthew, the color does not matter.
No, it doesn't matter. For inverse, any hammer, both the hammers, color doesn't matter. What matters is you need to understand. Just okay. Let me talk about hammer. The normal hammer. Market is falling down, falling down, falling down. At the here, look at the pressure the buyers have put it right from the wick. They pushed, 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 put the market up, and they closed it up. And the following candle, next candle is green. That means we are getting a confirmation that okay, buyers have taken in control. Otherwise, what would have happened? If you see another red candle beneath this hammer somewhere near the wick or below this crossing 50%, that means still buyers are not holding the grip. Still it is in hands of seller. But now whenever you see such pattern and you see a green candle above the hammer, that means slowly buyers have taken control. Immaterial, it's a red head or a green head. In the same way for inverted hammer, same. Sellers start pushing the market. Buyers started taking it up, but sellers put their all the effort, brought it down, but still buyers had some control. Why? Because it did not fall as much as it fell compared to the previous candle.
But then, if it was red, Matthew, then probably you would say that buyers did try to take it up, but in the end sellers managed to keep it down.
Managed to keep it down. Yeah, correct. Managed to keep it down, right? But what happens here is, see, you look at all the candles which are coming down like this down. This one, what happened was it went up the preceding candle. You see that it went up the red candle, the wick. That means they put so much of pressure. They tried to bring it up, but they could not succeed. But buyers have entered. That shows that buyers have really entered. The next candle gives you a confirmation that yes, now slowly the grip is in the. So what happens whenever somebody, okay, let me tell you the psychology of a human being. Most of the people might have read charts like us, right? Lot of retailers, big institutions, everybody know about chart. When they see certain pattern, they know that market is going to reverse. A lot of people start punching buying. Indefinitely, the market will go up because they know candle next hammer. Next, they saw a candle. All will start punching their order for long. Market will definitely rally. In the same way here, when they see this pattern, they have another green candle, inverted hammer followed by another green candle. People start punching long, the market indefinitely will go up. And this color doesn't matter, red or green doesn't matter for hammer. Okay, please note that. Don't get worried because market falling, and you see again a red one, this like a hammer, and it's red color. Oh, it may go down. No, because you'll get a confirmation. Okay, you even still you have a doubt. Wait for this candle confirmation. If you see a next candle which is a green beside this hammer, inverted hammer, take positions. and you can go long. Clear?
Yep.
Yep. So this is very, very important. Such candles you'll not see quite often, but whenever you see them, 80% chances are that you will get a good win ratio. It will definitely go long. 80%, 20% we don't know. Sometimes it can be a fake hammer, but 80% chances are there that you will get a good. The risk reward ratio will be really good. If it's a 1 day candle, risk reward ratio will be too high. If it's a 1 hour candle, little less, 30 minutes less, 15 minutes less, and 5 minutes less. I'm talking about 5, 15, and 30 minutes of people who play intraday in indices or stock, whatever. Other than that, people are playing like swing trading and all. They look for 1 hour, 1 day, weekly chart and all. Long term, you don't have to worry because hammer is a good sign. You can keep buying more quantity.
Um,
Next is yeah, sorry.
did we see the hammer pattern on the Lok Sabha results, the election results day or the next day?
I will show you. I will take you there. I will not only candles. I will also show you I'll do a replay of all the charts and I'll explain it. Don't worry. Okay.
Okay.
This is anybody can know. You can also read all this, but the important thing is I will replay the chart for any particular day. You tell me. I'll replay and we'll pause there. We'll look at the candle. You only should tell me that. Okay, from here, what is market is going to do. Okay.
Cool.
You will come to that stage. No, don't worry. And I'll give you exercise also for the next session. So this is very important for all of you. Candle is very important. Even if you don't put indicators, if you're thorough with the candles and you know what this candle's characteristics are, I'm telling you 70 to 80% you'll now not go wrong. You'll never go wrong. Yeah. So next, so we have done with hammer, inverse hammer. Now is harami. Harami in Japanese word means pregnant. So when looking at the candle only, you'll come to know that why they have called this candle a pregnant candle. Okay. And next is harami, which is again a bullish harami. One is you have a bullish harami, and next is a bearish harami. Bullish harami, see this? The market is coming down, and next green candle has crossed 50% of this red candle, and in between the high and the low of the preceding red candle. I repeat, bullish harami. See, it looks like a pregnant, right? Somebody standing in the stomach is protruding outside. That's the reason they start calling it harami. Harami means pregnant. So market was coming down and down. The next, what happened? A candle formed in between this inside candle, we call it, but it has also crossed 50% of this red candle. And this is a sure short sign, not sure. I would say 70 to 80%. Good chances that the market would reverse from here. This is bullish. Simple. Market is falling. I mean, don't think just like only 2 candles after it immediately fall. Chances will be too less because the timeline will be only 3 minutes, 2 minutes. So success of going up will be less. Again, it'll fall down. If it's like 30 minutes, 1 hour, 1 day, it's good chances that okay, yeah, the market may rally up. Lower time frame, the success is less. Higher time frame, success is more. So what we have to do, if you are an intraday player, you have to switch between 5, immediately go and check for 15 minutes, then 30 and 1 hour. If you're like a swing trader, I would say 1 hour. Then you can go for 1 day and a weekly basis. You can look, I'll show you. So this is harami pattern for a bullish one. Market is falling down. You see inside candle, which crossed 50%. In the same way, for a bearish harami, I'm showing side by side that you understand. The names are same, so you may get confused. That's the reason I put it side by side. For a bearish harami, see the market is going uptrend. And after this, suddenly you see a candle which is formed inside candle, this red one, we call it inside candle, and cross 50% of the candle downside. That is called.
So Matthew, when we are saying crossing 50%, we are only considering the body, right? Not the wicks.
Yeah, body, correct. No, not necessary. I mean, we can also consider the wick, but I would say I'll show you which cases you have to consider the wick, which cases we should not. But in this case, if it's something like this, you can consider the body because the wick is not so high. It's very less. But if the wick is too high, then you have to take a different call. I'll explain that. That is very rare scenario. I'll tell you that. Okay.
Sure.
Here you can take the body because the wick is too less. Hardly how many 3, 4 points or 10 points maybe doesn't make a difference. And it's cross 50% of this. Pretty simple. Bullish harami, falling trend, You see an inside candle which cross 50%, go long. Bearish harami, when the market is going up and up, you see an inside candle which is red, cross 50% of the green candle, you can go short. Simple. Clear? Haji? So I've spoken about hammer. This is all a bullish trend. Hammer, inverse hammer, harami. Harami, but I've spoken about two cases. One is bullish harami and one is bearish, so that you understand this is how it happens. Any doubts we can ask? Any questions you have? So your silence says that you don't have any questions.
So Matthew, what's the psychology behind this? The way you explained the other one, right? The hammer that you explained.
Very good. Yeah. So just imagine market is coming down, down, down. Everybody's selling. So when the market comes down, fear factor. Everybody starts, once this red candle, a lot of people might have taken again short from this. You look at you can see my cursor, right? You see my cursor?
Yes, we can.
Yes.
That position, people again might have gone for short, but suddenly what happened? Some big institutional person or DII or a retail fellow with a lot of money, he might have thought that, okay, I don't think market, so he might have pumped a lot of money. They might have pumped money. This candle formed. This candle, when it forms and which cross 50%, that somebody might have put a stop loss here. अच्छा इतना बड़ा कैंडल है भाई, मैं 50% का कैंडल का अगर 100 पॉइंट्स का 50 है तो मैं स्टॉप लॉस लगाऊंगा, तो मार्केट ना नीचे जा रही है. बट व्हाट सडनली व्हाट हैपेंड, इट क्रॉस 50%. So a person who put a stop loss and his MTM, he starts seeing that यार 5000 लॉस, 10000, 20000, फियर आके वो क्या करता है, कट कर देता है उसका पोजीशन. ही कट्स हिज पोजीशन. सो अ पर्सन, शॉर्ट पर्सन कट्स हिज पोजीशन. तो शॉर्ट कवरिंग होती है. शॉर्ट कवरिंग मतलब जो सेल, जो कॉल सोल्ड किया है शॉर्टिंग के लिए या पुट बाई किया है, व्हाट ही विल डू, ही विल सेल द पुट और ही विल बाय द कॉल. So in that case, what happens? The market will start shooting up. जो बंदा शॉर्ट इधर से किया है, ऊपर से किया है, from top, slowly market came here. So you have sellers at the top here. You have sellers at second candle. You have sellers who have third candle. Fourth candle, I mean, right from top. Example here I'm giving. Fourth candle, they see green happening. उनका MTM का क्या होगा? अरे 1 लाख प्रॉफिट वाले को 70,000 दिख रहा है, वो डरना शुरू होता. दूसरा बंदा 25,000 का प्रॉफिट में है, उसका 10,000, 8,000 कम हो रहा है. He starts panicking. What he'll do? Human tendency. Immediately you will book profit. When you book profit, market will shoot up because you might have sold a put और आपने call short किया होगा, मतलब HDFC short किया. When you short means you have sold a call, right? Or you bought a put. तो क्या होता है market, or could be a person who bought shares of HDFC. मार्केट गिरते जा रहा भाई, गिरते जा रहा है, तो इंट्राडे भी हो सकता है. He might have shorted. Suddenly when he sees the green candle, MTM का उसका profit कम होते दिखता है, he'll definitely, that's called short covering. You might have seen suddenly market goes up in the speed, momentum पकड़ता. क्यों? Because there is a short covering. That means people who have shorted the market, suddenly they see the buyers have entered with good volume, they'll reversing their positions. Means जो seller था वो buyer बन जाता है. In this case, other way case, buyer क्या होता है, seller हो जाता है. ऐसा simple as that. That's a logic. You might have seen when a market falls, why panic selling comes? Because I've taken 3 portfolio में 3 shares है, okay, and I have 3 shares of whatever, and my MTM was showing good profit. I'm showing like 10 lakhs or 5 lakhs or 1 lakh. Suddenly market falls. I see my MTM falling from 50, 20, 30,000, then 20, 10. Psychology, you want to come out of it. Your fear factor. That's how people jump out of it. Right. So क्या होता है? So you bought HDFC, you buy करके रखे थे. What you're doing, you're selling. Sell करने से क्या होता है? Market और push करके market comes down. Market is going here. I'm talking about bearish harami. Market is going up, up, up. You're very happy. MTM every day 1 lakh, then 1 lakh 20,000, 1 lakh 50. You're very happy. Suddenly one red candle came. From 1 to 1 lakh 20,000, it became 1 lakh. You'll say, okay, ठीक है, it's a correction. But you see another candle. Definitely you'll start panicking. You'll sell. Sell hota hai. What are you doing? You bought a HDFC share, it suddenly sold. So selling over here. Selling se market pushes further down. That is how bearish Harami pattern happened. In the inversely proportional bullish pattern happened. When they start selling, suddenly they see buying. All the sellers who have sold, they start panicking because the market is going up. They'll cover their positions. Short covering happens here. In this case, this is called long unwinding. Okay, I'll use this word. Remember, okay, write it down. When when shorting happens, means somebody shorted the market or sold the market, and suddenly they see a reversal. Short covering happens means they're covering their shorts. How? By selling the shorts. How they sell the shorts? By buying it. मैंने पहले बेच के शुरू किया तो मेरे को बाई करना पड़ेगा ना स्क्वायर ऑफ करने के लिए. So that's how short covering happens. In the other way around, in upward trend, everybody bought, buy. Futures buy किया है, shares buy किया है, calls buy किया है. Suddenly they see market going down. What happens all along? They call it long, right? Long unwinding. They're unwinding their longs, means they're selling their long positions. How they sell? Buy case वाला sell करता है HDFC का shares. जो futures buy किया है वो sell कर रहा है futures. जो call buy किया है he's selling a call. See the difference? That's called long unwinding. Here क्या हो रहा है? बुलिश हरामी में short covering हो रही है, इसलिए market भाग रही है ऊपर. यहाँ पे long unwinding. Clear?
Yeah. Thanks, Matthew.
Matthew, one request.
हाँ.
Can you please stick to English? I'm not that familiar with the fluency in Hindi.
Okay, sure. Sorry, sir. Normally I speak only English, but I thought being a Hindi crowd also there, so it will be easy.
I understand. I'm just telling my inability. So
okay.
No, yeah.
But whatever I tell in Hindi, I always repeat that in English.
I heard that, but just wanted to don't want to
okay.
That's it.
Sure,
Thank you.
So this is how bullish Harami pattern. And you might have seen whenever, anytime, anything you see, when a market falls down ferociously fast and immediately buyers enter, the market runs in the same speed. In the same way, market goes up, when falls down comes in the same speed. Next, bullish engulfing. Okay, there's another the name itself, engulfing. So what happens is one candle engulfs one or two, more than one candle engulfs that candle. So in this case, we are calling bullish engulfing because it's on the upper trend. That means a green candle has engulfed the previous one or two candles. Previous one or two or three candles. It's called bullish engulfing. It's engulfing, is eaten. It is, so let me show you so you understand it. Yeah. Market falling from above, coming down. It came down. Okay, you could ask Matthew, okay, we could see one green candle here. Then why we have not gone short? But the green candle has not crossed 50%. But and moreover, we haven't not got a confirmation. Next candle, should always remember one candle, whatever we are talking about, hammer, inverse hammer, or harami, we need to always have a confirmation candle. Otherwise, you should not go for it. Wait for that. Okay. Next candle confirmation, we haven't got it because they're red. Next candle we got. Next, remember this one candle we got, but next candle, see a huge candle. Actually, it engulfed the preceding candle plus more than 50% of the previous candle also. This candle. So is engulf. That's the reason the name has come. Engulf. So that is why we call bullish engulfing. So whenever we see a huge candle like this, preceding candle, it engulf. A big candle, you see, chances are there, good chances are there, the market is going to reverse because market was falling down, and suddenly you see a big candle which engulfs the preceding candle. That means buyers have entered. Buyers are putting their foothold. So what happens? Sellers starts panicking. As I told you, MTM, they start seeing MTM, profit, but the profit is reducing. So they'll fear starts coming. Okay, let me jump. A few people jump. And few people, after looking at the Morobuzo candle, still they'll see no market can go down. Again, you see another candle, they'll fear. Again, 50% will do short covering. Market will go further up like that. That's how market goes, keep on going fast up. Why? All the short cover, the short people start covering their short, means sold, no, they'll start buying. So market goes further up. So that is bullish engulfing. Okay, I will show the bearish engulfing in the next slide when we talk about bearish. Similar, if I have to talk about bearish also, same thing, bearish engulf. You will see a big red candle preceding a small green candle. Very simple. If you see a preceding candle followed by a huge candle which is engulfed, and to be 100% sure that this candle bearish bullish engulfing is successful, you see the next candle at least 50%. If you see green, okay, 50% means sure shot because it has gone above the bullish engulfing candle 50%. You can buy 50% here. Above that, you can buy another 50%, or you can buy full 100% above this 50% of the candle above the bullish engulfing. That is a sure shot. This you have to write it down on a piece of paper and act accordingly. Don't think. Sometimes what happens, you'll see beside a bullish engulf small red candle. You may know your market is going down. No, don't fear. Unless this bullish engulfing candle is a red candle crosses below this bullish engulfing, that means okay, fine. What happened? Buyers tried to push the market up ferociously, but what happened? Sellers were more powerful and they pushed the market further down. So a lot of sellers have come, and that means then okay, we have to give up. No, we will not go. But in this case, you see a big candle engulfing followed by another green candle, short sign will go up. So you can go long. Simple as that.
Okay, Matthew, one question. For the candles that you have highlighted, right, the ones which are in the circle.
Huh?
The green one, does the open price has to be above the previous close, or even if that green goes further below the red one, which means it opened further below but it still went up, is that also the same pattern or is it a different pattern?
Engulfing means what? I'm engulfing something means what? Engulf, what is the meaning of engulf?
Engulfing means you are just going beyond on both the sides.
No, you're eating it up. You're actually engulfing. It means eating it up. So this candle actually ate this small candle, right? Pura khali hai na? It has already ate this.
So if the green was further longer on the bottom side, it would still be an engulfing, right?
Yes, of course. Yes, no problem. Okay. Yeah, it will be engulfing candle. Even if down or up, whichever side it is an engulfing candle. Engulfing candle means it is much bigger than the preceding candle. It could be engulfing candle can engulf preceding one candle or two or more than two candles. It could be. Okay.
Okay.
If you look at June 4th case, I think one of the sir was asking me. I will show you in the chart how many candles it has engulfed. That June 4th candle. Too many. That's called a bearish engulfing. Huge candle engulfed a lot of preceding candles. It just ate like that. So yeah. So this candle can be bigger. The opening can be further down and the closing can be further up, but it has to engulf. Simple as that. And the next confirmation is next candle, green candle above the engulfing. I hope clear for one and all. Okay, next that is bullish. Marubozu. Actually, Marubozu candle doesn't have any wick. Okay, it shows 100% hold for a bearish or a bullish pattern. Means there's no wick. Wick means what? When I see some wick, okay, let me show you here. Wick means either seller try to push the market down or buyers try to push the market up. So you form little, you see this wick. When you don't have any wick on the top or the bottom, that is where you call Marubozu. Means 100% authority of either the seller or the buyer. If it is a buyer Marubozu, that means it's a green candle with very small wick, means like tiny. Body is like huge, like Hanuman, but wick is very small. Even in the bearish also the same, but it will be in red color. The candle is red color. Huge body with no wick or very minute wick. We can't, I mean, very minute, I would say. Okay, that's the difference. The term Marubozu means bald head or shaved head in Japanese. That's the reason why they're calling it shaved head, means there is no wick. You won't see any wick. Bald head, no wick, no hair, something like no wick. So bullish Marubozu, see the market is coming slowly coming down. You see a big, huge candle here. Like you asked preceding question, see it came from the down, right? Totally it went up, but crossed 50% of the preceding candle. That is a catch point here. Marubozu candle is a big candle without a wick or with a wick. but the wick would be very small, and 8, went 50% up above the preceding candle. Preceding candle is a red candle here. It went 50% above. So that's when we can say, okay, now the buyers are having a foothold. They're trying to push the market up and keeps going up. When just psychology, I'm telling you, psychology of people who might have shot from here, here, here. When this green candle happens, you see that MTM, what happens to MTM? Profits are shrinking. When profits shrinking, human tendency is to square off their position. Immediately they'll do it. When squaring of the position, short covering happens. Short covering will push the market further up because all the short people are they might have shorted calls or future sell, or they would have sold a share. Now they're buying it. So buying, what will happen? It'll push the market up. Inversely proportional with the bearish Marubozu pattern. Okay. Market going up, up, up. Suddenly you'll see a Marubozu red color, which is cross 50% of the candle and a huge candle. So what will happen? All the people who went up long, they'll panic, because first who will panic? Who might have entered on the third candle? They will panic because immediately they'll start seeing some losses. They'll panic. And the second candle, those people also panic because their MTM profits are going shrinking. The first candle people also will panic because MTM will, and they also studied candlestick patterns, right? They know, oh, okay, we have to cover our long position. So that's called long unwinding. Long unwinding happens, the market starts falling down. So this is bearish Marubozu. So we have learned about hammer, inverse hammer or inverted hammer. We have spoken about harami. Harami in Hindi actually has a different meaning, but in Japanese it's called pregnant, and that's the reason it's like a pregnant woman, they call it. We have learned this bearish and bullish both. Next, we have bullish engulfing. I told you about bullish engulfing. Then we spoke about Marubozu. All these patterns are bullish patterns. I've clubbed with bearish because it is easy for you to understand. Sometimes it's a little confusing, but here color is very important. Unlike hammer, it doesn't make any difference if it's a red color or green color, no problem, but it has to be at the bottom. Means market falling, falling, falling down, and it is at the bottom. Hammer, inverted hammer, or the hammer red color, no problem, no issue. But all other candles, it is very clear that it has to be green for a upside and red for downside. And for Marubozu, whenever green happens, it has to happen at the bottom of the market. Whenever it's down, market was falling down, it has to happen down. For a bearish Marubozu, market went up, up and up. You see a Marubozu which is red in color. That's when you decide to go opposite direction. You go short. Clear? Any questions? Please let me know. This is fundamental. Okay, this you have to every day. You watch this chart for 1 week. I'm telling you, it'll get imprinted in your head so that whenever you see a chart, you can identify. Okay, this is hammer. This is inverse hammer. This is Marubozu. This is like a piercing candle. All that you'll come to know. It's pretty easy. It'll become. Your eyes get the more you watch a chart pattern, your eyes will get trained and you'll easily identify patterns. All right, so next, can we move to the next one? These all are bullish patterns which I'm talking about. Next one is piercing line. The name itself denotes. Okay. I think I'm not. Okay, so we'll come to piercing that one later. Next one is tweezer top and bottom. This is both trends you have. This is like for bullish trend and for a bearish trend. Tweezer top means almost candle closing at the top. Two candles are on the top or two candles at the bottom closing at the same place. Same level to level you'll see. Like if you look at this image, see market went up, up, immediately you'll see a candle which is closed at the same level. From there, it started reversing. Tweezer, it has to cross minimum 50%. It can be as big as the green candle, same to same size it can be, or it can be cross more than 50, should be crossing more than 50% of the candle, but at the same place, the candle will reverse. For example, wherever the green candle was there, exactly same. If you draw a line, you can see that the candle is reversed from there. That means that was a resistance. So every stock or every derivatives will have a support and a resistance. So this means that market went up. That's where the resistance was placed. So immediately market turned back. So from the same place. So that is called tweezer top pattern. Top, both are tweezer bottom and tweezer top. So this is first what I'm showing you, or what I'm telling you right now is tweezer top. There is a tweezer bottom also, same way, but inversely proportional. What happens? Market is falling down. Market has hit a support. For a tweezer top, market has hit a resistance. For tweezer bottom, remember when you say bottom, support, top resistance, bottom support, top resistance. So bottom hit a support, support the same place it touched, candle went up. So again, chances of market going up are high. Not necessary as a diagram showing. It could be after this tweezer top, you could see a small red candle, little petty one, but only criteria, it should not cross this red candle and form another red, cross this green candle and form another red candle below that green candle. Then that is nullified. Then this tweezer top has no value. That means it's nullified. But if it goes up, you see another green candle which is on par with this tweezer bottom and goes up or on the same line and keeping a upward trend, fair enough. We know that it will go up. So that is the difference between tweezer top. Whenever you hear the name top means it has hit the resistance, it's going to fall down. Tweezer bottom means it has hit the support and the market will go up. Just opposite. Top means it's going to come down. Bottom means it's going up for tweezer. Clear? Any questions you have?
Yeah, Matthew. So sometimes, two patterns may look similar, right? How do we make it? So for example, in this case, I know it is not totally similar, but it looks similar to bullish engulfing. So in a glance, I may confuse it with bullish engulfing. How do
Sir.
how?
No, okay. No, 1 second. Bullish. Why you saying
Sorry,
bullish engulfing?
Harami. Sorry, Harami one.
Harami,
Where
okay.
yeah, that one. Right. So I may get confused. The second chart, especially, right, where I may little bit get confused with Harami.
Okay. I'll go back to the chart and show you about Harami. Wait. Okay. See, this is a Harami, right?
Yeah.
You see Harami ka kya hai? It is this candle in between the candle. This candle is formed. I told you top and bottom in between the green candle is formed. Here also you see when it's reversing, the top and bottom in between the candle has formed. Inside, that's called inside candle. Remember, if somebody says inside candle, and you look at this pattern like this is called Harami. This is bearish Harami. This is bullish. There's an inside candle. But in this case, good question. In this case, I told you, both of the candles touch the resistance and coming down. Here, both of the candles are touching the support and coming down. But in the other case, it's not the same, right? It's not the same. It's not touch the support the top candle or the bottom. No, it doesn't touch. Here also same thing, but it's formed an inside candle.
Yeah.
You see the difference now?
Yeah. Yeah. Okay. And also the potential direction is same. So
Yes. Correct.
I mean, does it matter? That was actually my question. Like, does it matter if I get confused and if I just identify the potential direction? I don't know if I'm not able to put it aptly,
Okay.
but yeah,
Okay.
my point is if I confuse between two and I understand the potential direction, that should be enough, right? Or
Correct. Yeah. But bullish Harami and but here see bullish. Okay, let me show you the difference. Bullish harami, where it is formed? Here at the bottom.
Yeah.
Bottom. And bearish harami at the top.
Top. Yeah.
Same way. Where did the tweezer top pattern be formed? At the
Top.
Top. So ulta ho gaya. Here tweezer bottom. So it formed at the bottom, it's going up. It formed the top, it's coming down. Get my point?
Yeah.
Yeah.
Okay.
Again, I'll go back so that you get more clarity. See this bullish harami pattern, same thing. It came down, big candle, but you see an inside candle. From there, it went up. Here, market is going up. You see inside candle, market started going down. Here also same thing, but only thing is that here it touch the resistance. Okay, here one more thing what you need to add is here not necessary that this could have touched the support here. When you see a this bullish harami pattern, not necessary that this bullish harami pattern was formed exactly close to your support, or bearish harami pattern could have formed exactly at the resistance. No, not necessary. But here you can see most of chances are high, which states that this pattern, tweezer top pattern, you'll see 70-80% close to the resistance. Matlab, market has come close to the resistance, it cannot go further. And that's the reason people have already taken, okay, fine, I have to book my profit. When people reach the resistance, the buyers, what they will start thinking, okay, I've reached the resistance. I know we cannot go further. Let me book my profit. As soon as they start booking profit, it's not necessary that sellers might have immediately come. Okay, sellers may be waiting. Okay, let's see whether it crosses the resistance and keep further going up. The sellers may be scared. You don't know. But what happens? Buyers also scared, right? Because they look at the resistance. All right, I don't know whether, okay, let me book my profit. So slowly booking profit happens. So again, small red candle is formed, not such a big small. Other people looking at their MTM, oh, my profit is reducing. They will start booking the profit like that. Once this candle is formed, then the sellers, half of the candle, sellers starts jumping in. And that's how the market further falls down. That's psychology. Simple psychology of market.
So Matthew, one question about the tweezer patterns that we are seeing. Again, are we dealing with just the body or considering the wicks? Because the diagram shows that it is the highs and the lows that we are considering, not the.
No. Here wick doesn't matter, but on the tweezer, the only thing you should keep in mind is that both the candles will be hitting the same line. For example, means at the same point. For example, if it's Nifty is at 23,500, this candle will touch 23,500 and stop there. Next candle will start from 23,500. They'll see it will form. Neither will go too much ahead or too below at the same point. That's the reason they call the tweezer top. Means both of them have formed the candle at the top or similar candle at the bottom. You look at the diagram below, same place they have started reversing, right? Here also same place they started reversing.
Yes, my question was more like if they had a say little longer wicks on either side.
No problem. Longer wick, no problem. But most of the time you will not see a longer wick. It will be shorter wick only. You'll not see a longer wick. But even the long wick is there, no problem.
Okay.
Even the wick is there, no problem. But it's not be too long. Okay, remember, I mean, too long means again there's a different. Then the candle may terminology may differ. Then depends of the candle. Because if this candle, just imagine the green candle touch there, but the wick is formed and forms a hammer here. Then the connotation, the understanding of the candle goes different, right?
Yes.
Yeah, that's the whole point. You can ask questions, okay? Don't worry, you can ask any question. Only answers can be stupid, but not questions. So you can shoot questions if you have. Okay. So tweezer top, same place. You can at the diagram, it shows almost same place, but you not see in the market exactly like somebody has put the tape in, but you may see slight difference here and there. But we can quickly with our naked eye, we can make out that okay, this is the tweezer top. And sometimes what you see, same candle size also. It touched the resistance, the green candle, the red candle also form the same size candle as of the green candle. That is also called a tweezer. Okay, clear? So next we'll go to this morning star. All right. So morning star, let me show you the candle. This is a morning star. Morning star means market is falling down, 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 down. You see a big Marubozu candle because it doesn't have a wick. See, I'm using the terminology which we have spoken before. Why I'm calling it Marubozu, bearish Marubozu, because it doesn't have a wick at all and a U big candle. After that, there is one small candle which is called doji, which I have not told you, but the preceding slide will come. Small doji means indecisiveness in the market. Market buyers and sellers are caught. They're putting same equal kind of a pressure. So market is neither going up nor going down. So they're fighting, but nobody's winning. Then after that, you see one good candle, uh, a bullish candle forming. So these three candles put together, a huge bearish candle followed by a doji indecisive, followed by a green candle. That means buyers have started. This is called evening star. So if this is formed, whenever the market is falling down, 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 and you see a good big candle or a bearish candle followed by a doji, then a green candle, chances that the market is going to reverse. Potential direction is upwards. Simple. All right. So morning star, the name they've given, they call it looks like a star, but I never found it to be. But because if you diagonally draw a line, no, one like this, it looks like a star. If you connect all the three candles. So market falling down, you have a bearish candle followed by a doji. Doji means, see, you have upper wick, lower wick, the body is very thin. That means indecisiveness in the market. So the buyers and the sellers are putting equal pressure. The market doesn't know where to go. But after that, see, fight. So that means two people are fighting, boxing, sellers and buyers. Then somebody has to win, right? So who won here in this case? You see a green candle. So the buyers won. So from here, the market has to go potentially up. So that is morning star. There is an evening star. Okay, we will share when we talk about bearish. So after that, three white green soldiers. These three white green soldiers, I would only suggest use it on a daily basis. I will not suggest for intraday players because it gives false. Made about 2-3 times my SL got hit. So after that I stopped trading. Only if it's a daily chart, you're using day, weekly, I would say yes, go with it, or a monthly chart, no problem, go with it. But intraday, like 5 minutes, 10, 15, 30 minutes, I would say no, because chances of failure is high. Simple, you can see the diagram here. Market was coming down, 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 down. And after that, you see three green candles going up. It has to be green. Candles going up. Up means the preceding candle, the succeeding candle should be always higher than the preceding candle. That's the rule. Cannot have a green candle which is a little lower than this. It has to be upside. Then chances are there the market would go up. See, after the three candle, again indecisiveness. After that, again buyers went up. So three white. Why they call it? Because in US they have only white candles and black candles. They don't have like us, green and red. So that's the reason they call it white. And I put it green here, but we know that it's green. All right. So green, three white, green. Market falling down, followed by three candles. You can take a call if you're a daily player. I mean, if you're looking at a daily chart, then you can be sure that okay, chances are high that market could go up. And I mean, don't get fooled. Okay, see, this is the right representation. Market went 3 days up. Next day again, doji formed red. So people start thinking, okay, market could fall. For this market to fall, it has to cross this entire green candle, come down. Then we get a confirmation that okay, now buyers have lost control. Sellers have come. But here, not even hardly 20% that green candle has the red candle has engulfed, right? Not even 20%. No problem. Let it be there. The next candle green will go up. So we have almost completed the what do you call the bullish candles. Okay, fair enough. So now what I'll do before going to bearish candle patterns, I'll go to the chart. One by one, you have to tell me that the candles what we have gone through now, right from the beginning. Okay. From here, from hammer, inverse hammer, harami, bullish engulfing, marubozu, tweezer top and tweezer bottom. Along with, we also had the morning star, 3 white soldiers. All right. So shall we go to the chart now? Yes or no?
Yes.
Yeah.
Yes.
Okay, great. Take it to the charts now. Very good. Okay. I did not tell you about this. Oh, sorry. Wait. Okay, what we will do. Let me go here. Okay, so that you understand. Okay. You want to go take stocks or you want to go with indices? Tell me. Want to pick up like HDFC, ICICI or any stock, or you want to go with like a Nifty, Bank Nifty, or so?
Yeah, Nifty looks good, I guess. If everybody's fine.
Nifty is okay, or you want to go with any bank stocks? Nifty is okay, so fine. All right. So what we will do? Let me go with the time 3 p.m. Okay. All right. So this is like 10. Market opened at 9:15. Okay. Should have gone. Let me take a little forward. Dekho. All right. Let me ask, what kind of candle is this? Look at my cursor. The second candle, the red one. This candle. This red candle, what candle is that?
Bearish candlestick.
No, that is bearish, but what is the name? Just now I told you, no, it could be a small wick, but it's a huge body. What do we call that?
Marubozu.
Correct. Small wick with a huge body. This is not exactly a Marubozu because you have a little bigger wick, body got 3, 4, 30, 40%, but this is small wick with a huge body. Okay. Let's start with, wait, hold on. Let's start with 9 o'clock so that I have a clear. Okay, market is going sideways. Suddenly from here. Okay, let me stop here. Market was going sideways. Okay, from here like this, it was going sideways. So neither buyers were having control because there is a resistance, the top support. It was going up, down, up, down. Sellers were there, buyers were coming, but they both are fighting. Buyers are fighting, sellers are fighting. For how many minutes? From here, 5, 10, 15, 5 minutes chart, right? 1, 2, 3, 4, 5, 20. That means 20 to 5 is how much? 100. So almost like 1 hour, 40 minutes, they were fighting. After what happened? Suddenly it it broke the resistance here. A lot of people, what happens, because some people want to go long, indecisiveness, right? Some people might have thought, okay, market will go long because Nifty is going long. Some people think, no, it can fall because it's all-time high. So a lot of people might have taken positions for long, might have taken positions for downside, and they're waiting because so much of time they're waiting. Again, I'm telling you, the longer the consolidation, the longer you'll get a risk reward ratio will be high for you towards upside or downside, whichever side the market goes. But you need to have patience. People might have been having, no, you need to keep on holding patience. Some people not have it. They'll book the profit here or take the loss here. They'll jump off because they cannot wait. People, a lot of patience. What will happen slowly? See, the market came with a big candle, bearish candle, and started falling further down. Again, there is again a confirmation that market is going to fall down. So a lot of people might have, as soon as this it broke this support, people might have taken bearish positions. And big candle, right? Bearish candle. Next candle. Again, it came down. They saw a green candle which is closed above this candle. Okay, let's see what happens after that. Normally, what will happen? People who might have taken short from here, they can see the MTM profit going low, 50,000 becoming 30, 40. The next candle also was on the top, right? See, people short from here. Here also it came. They might have seen. They saw a green candle. Few people might have exited. Other people might have held on. They thought, okay, market is going to come. You see here what happened? Oh, here, 2 candles.
Is it a tweezer?
Yeah, tweezer. Little space. You can't have it exactly, but yes, this is a tweezer. At the bottom, remember what we said? The tweezer has to form and the market is falling down from top. Tuck, 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 it came down, bearish. Tweezer formed. From here, market went up. So what happened? A lot of people, when they might have seen this tweezer, a lot of people who have shorted the market would have, what do you call, taken off the short positions, short unwinding. Then market started going here, further up, 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 gone up. This is a perfect example for a tweezer. Same, almost same support. It took it. Yeah, there's little different, but that's okay. Same size, it went up and gone. Good. So somebody identified a tweezer. Okay, let's go from here again. Which day was this? Okay. Okay. Market went up. This is called a doji. I've not spoken to you about doji. Okay, when market goes up and you see a doji followed by a red candle, this is called a evening star. That is for a bearish position. You will be learning that. Okay, remember this. This is called the evening star. This is called morning star. I've shown you, but this evening star means a green going up, followed by a doji, followed by a red candle goes down. What happened? What is this candle? What is this candle? Look at my cursor.
Inverse hammer.
Very good. Excellent. Inverse hammer. It came from, again, inverse hammer. When you have to take a opposite direction, positive direction is market from top. It came down. See, big Marubozu candle, again a red candle. But here, see, doesn't make a difference when the hammer, inverse hammer is a red or a green. No problem. But it came, it took it. Next confirmation, you got a green candle. From there, market went up. Very good. Inverse hammer. That's what I'm telling you. If you start looking at the chart every day, your eyes will get trained to look at those charts and definitely you'll improve. Days 20. Oh yeah, market close 21st. No, okay. So almost we have covered because I don't think we will anyway. So time is running out. So this is how you can train your eyes. This I'm showing only at a 5 minutes window. Okay, you can change that to 30 minutes. Also, you can see a different pattern here. Okay. But this has got a long way. You can check here also top, bottom, how candles are forming, what is the action taken by people when they look at different charts. You have to train yourself. Okay, let's go. Now the other part, bearish will be easy because completely opposite to bullish pattern. So first one is hanging man. Hanging man is nothing but.
Sorry to interrupt you, Matthew. Are we going ahead with bearish today? So we're already 10 minutes over. So, like,
Okay, it's 5 o'clock, right? Okay. All right. So what do you do? Okay, this exercise I'll have each one of you, or let me see who are part of it. 1, 2, 3, 5. I want each one of you to identify in the chart and send me a screenshot in the what do you call paper trading. At any one, if you can identify all the bullish candle patterns, it'll be great. Go to pick up any stock or indices and just circle it and send it to me. Okay. I think you have a 1 week's time. Even if you spend like 30 minutes, it'll be great.
Sure.
sure.
Okay.
And you'll be sharing the deck, right, Matthew?
Yeah, but I'll only share after the bearish is completed because I have complete the bearish also, right?
All right. Okay.
Right. Definitely, I'll share the PPT. But my recommendation would be please use any stock which you like, identify those patterns and share it in my paper trading so that even others can look at it. Okay.
Sure.
All right. Thank you very much. Have a blessed day. Bye bye.
Thank
All right.
you.
Bye.
Bye.
Yep.